Okay. Hi, I'm Peter Rose, founder of Longwood Currency Trading. How to trade Forex to win as opposed to learning how to trade not to lose. There's a big difference. However, in learning how to trade Forex, you have to focus on not losing. If you don't have your risk management right, you're not going to have any money left to trade anyway, so it doesn't make any difference. All right. But I don't see anything out there being offered as to how to change that paradigm into winning. If you are taking courses or reading books or all that sort of stuff, most of that is just the mechanics, the plumbing of trading. This is a trend line, this is a pip, this is how you size your bank, all that kind of stuff. And then they get into talking about how critical risk management is. And that's absolutely true. But once you get your risk management, you understand the principles of risk management, what more is there to talk about? You know, when I started my trading, I'm not going to repeat my sad story of how I lost a lot of money and then came back, but the principle that I recognized in building my initial rules that enables me to trade a six-figure account confidently isn't one of risk management. The risk management is not part of my trading rules, other than as a guideline from an underlying platform of how do you trade to win? What do you need to do? The educational space is full of a lot of people offering you advice and showing you how much money they make, millions sometimes. But if you look under the sheets, they're trading at 200 to 1, and some of these guys are trading at 500 to 1 leverage. If you're trading at let's take a for instance here. If you're trading at 500 to 1, you're trading at $500 a pip. Well, if you get it wrong by 3 pips in the beginning, you're $1,500 out on your 10 grand. Or if it's $100, I mean, you know, it doesn't make any difference. So you have to be really sure of your entry in order to get that thing to go. And once it's going, I don't know if you have how much experience that you have, but it'll go 10 or 20 pips, and then you'll have a retracement. There are reasons for this. It's based on order flow. It's kind of unique to the Forex market. You can't come to this thing from a stock market background, or like I did originally, or from a real estate investment background, and be successful, because it's different. The purpose of the market is different, right? And if you're not in full comprehension of risk management, you're doomed. If you are aware of risk management and you're trading at 200 or 300 or 500 to 1, then you're really not understanding risk management at its core. Can you drive your car at 90 miles an hour on a residential street? Yes, you can do that. Is it safe? No. But are you going to get to your destination faster? Yes. How often are you going to be able to do that? Probably a lot. But what happens when you go through that intersection where that one guy, that one time, broadsides you and that's it? Is it worth all of the hustle and the bustle when you could approach the thing more safely and get to your destination? You just have to go there more times in order to accomplish what you need to do. If you're trading at 500 to 1, you could take a $10,000 account and turn that into a six-figure account really fast. There's guys out there at this particular time, this is the end of January of 2024, and there's a lot of people out there doing challenges. I'm going to take $100 and I'm going to run it to $1 million. I got to take $1,000 or $1,100 and whatever, and I'm going to run it to $1 million. I'm going to take $500 and I'm going to run it to $3,000 or $4,000. All these guys are taking these bets, but they have a tremendous amount of experience in entry theory, and you probably don't, because if you did, you'd be the one making the video. You're trying to trade your low to mid five-figure account, and you're not having the success that you need to have. Why is that? It's because you don't understand entry analysis well enough, and you don't appreciate risk management well enough. So those are the skills that you need to learn, not how to trick the system at 200 to 1 and run your $500 to $3,000. And then take the $3,000 and run that to $9,000. Or run that to $30,000. Well, at some point, at 200 to 1, you're going to lose $30,000. You're going to lose it all, or $100,000. You will lose it all, because at some point, statistically, you're going to get it wrong. And I don't understand why folks that are getting involved in the currency trading, just because you're provided with all this great leverage, that you throw all the real understanding of trading out the window, just like you would if you just put a blindfold on and drove at 80 miles an hour down your residential street. Yes, first, risk management. You have to learn how not to lose. That is critical. I'm not debating that. And there are a lot of resources out there and educators that are providing that slow growth path to learn your skill. The problem is, let's take me for example. I started looking at currencies in my 60s. That was 2007. I'm 74 years old right now. So I don't have 10 years to build up a lot of money. I don't need a lot of money. I retired from 40 years of real estate investment. I'm okay. I don't need to pay my light bill for my trading. I don't need to replace my job income. I'm retired. I don't have a job, so I don't have that to replace. I'm trading for a different purpose. I'm trading to win, not how not to lose. I've got that all set. I understand risk management. But once you understand risk management, if you continue to use risk management to trade, then you need a lot of time in order to make that account grow. If you could make an average of $300 a day, which is not much if you're trading a 10 lot, that's right. You're there. You trade 10 lots, $100 a pip. You go 3 pips, you got $300. But what happens when you lose that trade at 10 pips? Let's say you'll just lose $1,000. So making the small amounts of money is not difficult, but it's difficult to keep it. You have to, if you want to try to make $300 a day from a statistical standpoint, you're going to really have to be trying to make $800 to $1,000 a day, because all the shit happens and flushes out and all that other kind of crap. I can trade and get my account up $15,000, $16,000 and take a $4,000 hit. It goes quick. So risk management and how not to lose is very important. And if you have the time that you could build up your skill and your account size so it's large enough that you could make $300 a day, $300 a day is $72,000 a year. If you had a job that paid you $300 a day, it'd be $72,000 a year. So the question of, can you make a lot of money from, if you had doing a 10 lot and you're trading to get to 72,000 and you got $100,000 behind that 10 lot because you need some margin and all that other stuff. I'm talking about U.S. reasonable rules of trading. you make 72% on your money. And you think, geez, all I got to do is make 3 pips a day on average, and I'm all set. But yeah, you are all set. And that's certainly how not. But that's how not to lose, because you are behind the barrier gates of the speed sign on the road. You're on a residential road. It says 35 miles an hour, and you could go 35 miles an hour and safely get to your destination all the time. I mean, statistically, maybe a 0.1% you're going to end up with somebody bumping into you. But if you take the far tails off that bell curve, you could say driving at 35 miles an hour down these residential roads to get to the grocery store, you could do that 1,000 times and you'd be okay. If you did that at 80 miles an hour, well, all of a sudden you're in a zone where you could make maybe 3 trips and you're going to get hit. So if you're trading in how not to lose, that's the safe way, and it's okay if you're 20 years old or you're 30 years old, because you've got 20 years to let that grow and to compound. So you're not replacing your job income. Look, if you're trading an account and you're making $70,000 a year and you quit your job, you need that $70,000 a year to live. What happens if you get fucked up in the brain, or the markets change, or whatever happens and you're not able to trade anymore? Where does your income come from? So that's ultimate risk management. Oh, I'm going to learn how to trade until I can make job replacement income, until I can make $40,000. I'm trading at 200 to 1, and I'm going to make $40,000 my first year, so I'm going to quit my job, and then I'm going to trade, and all of a sudden I lose $60,000. I don't have a job, and I don't have any money in the account. What are you going to do? Well, if you're 20 years old, you can start over again. You know? But if you're 50 years old, even 40, you're running out of time in order to build an account that will pay you in your retirement. That's the long game. And you're not going to win the long game by trading to not lose. That's a slow, steady growth process. You'll have to continue to work your job, and you'll grow that account slowly over time, so that in 10 years, maybe you'll start with a couple of $3,000, $5,000 account, and over a 10-year period of time, maybe you'll grow that into $50,000, $100,000. I mean, I don't know what you're going to be able to do. Let's say you could safely grow that at 30% a year. And you do the math on that. It's double it in about 2.5 years. You take that 5,000 and you'll have 10 in 2 years, and you'll have 20 in 4 years or 5 years, because you got to pay taxes and stuff. I mean, you do the math. It'll take you a while at that level to get enough money to replace your job income, or to have money in the bank, so that as you draw 4% out, the 4% rule, that's your living with your Social Security and all. You have to look at that long game. Why are you trading? Are you trading to buy a Lamborghini? Come on. What are you going to do when you lose all your money and it costs you $600 just to get an oil change on the Lambo? You know, you're going to be able to afford that. There's so many folks that are living in a dream world, and they're betting on 200 to 500 to 1 leverage. They can change those rules on you. If you're finding places right now at 200 and 500 leverage, they could change those rules. The U.S. did that. Said, no more. 50 to 1. That's it. Oh, and by the way, you got to put up 5% of the cash value of the transaction. You're very attracted to doing the 500 to 1. Oh, look what these guys are doing. They're taking $10,000 accounts and they're running them to $40,000 or $50,000. Yeah, but they understand entry theory, and they're in a tax environment and a regulated environment where it allows them to do the 500 to 1. And how many times do you blow accounts at 200 and 500 to 1? It takes a tremendous amount of skill to trade at 200 to 500 to 1. Tremendous amount of skill not to get blown out. And even the guys that are some of the best will ultimately blow out when they get it wrong. And they will get it wrong. You will get it wrong. But you won't build job replacement income or financial security by trading in a manner that you're trading not to lose. You have to change the paradigm in trading to win. There's a big difference. It's a shift in the paradigm and the way that you think, and it's a shift in the way that you implement your rules. The rules that I got 3 rules. They're easily extendable, whether I'm trading a $500 account or I'm trading a $100,000 account or a $200,000 account or an $80,000 account. It doesn't matter. They are all, because the rules are condition-based on principles and not on whether there's a Bollinger Band confirmation with the RSI or some stupid shit like that. Look at the stuff that you're being told that works. It doesn't work. Fibonacci's don't work. There's absolutely no correlation between a Fibonacci number and order flow in the currency market. None, zero. I've got a degree in physics, almost a minor in math. I invested in real estate for 40 years. I didn't just drop off the end of the boat. And anybody who tells you that fibs work is lying to you, or they're lying to themselves. Now, the fact that you can look at a chart and say, oh, here's this level and here's this level, those are pretty good. Let's confirm that with a fib. How many fib lines are on there? Don't you think that there's a high probability that at some point those fibs are going to hit those values? The fib doesn't tell you anything. It just is a coincidence that they match up. But you're involved in all that kind of stuff. Why? Because you're trading not to lose. Because what are the levels about? What are the fibs about? What are the Bollinger Bands? They're when to trade and when not to trade, and constraining you in order to look for those, quote, setups or those indicator confirmations or whatever that you need, instead of understanding how to trade. And then you're going to learn how to take that trading in a how not to lose basis and just shift it slightly into trading and how to win. And when you trade and how to win, you now move from risk management to money management. And nobody's talking about money management. You know, I understand money management, and there's a big difference, guys, in money management and risk management. And you need to be able to understand the difference between those two and how you transition between the two different paradigms. And you've got to have the correct set of rules to do it. Sounds complicated, but it's not. But it's not something I can talk to you about in a 15-minute video. I'm just trying to make you aware of the fact that you're being trained by looking at the videos and the books on how not to lose. You will not build wealth that way unless you have a lot of time and a lot of patience. I'm just telling you. You're looking at 10, 15 years before you're going to be able to establish a solid enough process and a process to have grown that account to the point where you're either replacing job income, or maybe by that time you'd be too old, you won't need a job income to replace. You wouldn't have been able to develop the skill fast enough to replace the job income. Unless you take the shortcut and you go 200 to 500 to 1, good luck to you, you'll probably lose that account. But understand that most of the stuff that you're most likely doing, 98% chance that you're doing, is learning how not to lose. And you need to shift that paradigm and how do I win? Which means you need to resolve the problems of all this risk management dialogue that's out there, that's plugging up everybody's view. You need to solve that right away so that you can get on how to win. Well, that's all I'm saying. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.